So let's get straight into it. So the questions I had was, firstly, how do we determine volatility on a footprint? Again, I'll answer this as we get onto the footprint chart. But the second question is kind of what I want to answer. And someone asked, how are tops and bottoms formed on a footprint? And in one sense, it's a good question. It's a very broad question. But in another sense, it got me to thinking, well, maybe it's time I actually do a stream and I cover the basic premise of what templating is. So templating, in essence, I'm going to give it to you in a nutshell, is applying a set of variables. It's applying, what we used to call a stencil. I don't know if in South Africa we call it a stencil, but in essence, a stencil is, a piece of plastic that you put on a piece of paper, and you fill in the grooves within, the piece of plastic, and ultimately on the other side comes out, a mold or the exact lettering or designs of whatever the stencil might be. So it's a manner in which that you can put the stencil on anything, on any chart, any time frame, and apply the same methodology, and you're going to get varying degrees of answers. So again, it probably hasn't made sense to a lot of you. Not to worry, I'll go through it on the next slide. Okay, so how are tops and bottoms formed? Well, it's not a case of me telling you how they're formed. I could tell you sometimes they're formed on high volume, sometimes low volume, sometimes they happen on gaps, sometimes they happen at 2 o'clock in the morning. Okay, there's a number of different ways in which tops and bottoms are formed. It's not up to us as traders to determine when a top or bottom is formed. It's up to us as traders to determine when a pattern, in other words, a recognizable pattern, is in play that could ultimately tell us there's a high probability of a high or low. Okay, so that's the key crux. We don't care where the high or low is formed. Okay, the price where it's formed is completely irrelevant. What is relevant is the pattern in which it is formed. Okay, because those patterns we can repeat. Okay, so how are we going to go through this? Well, it's very simple. We're looking for these patterns. What are these patterns that exist? All right, that keep telling us, okay, this is a high probability of a low or a high. Now, in order to develop these patterns, in order to start to develop an understanding of how highs and lows are formed, you have to go through a sample set of hundreds of different highs and lows. Okay, more importantly, you have to learn to categorize those highs and lows. And that's kind of what I've done here. And I'm going to go through as an example, so bear with me. Okay, so what we do every single day as part of my debriefing, I'll go through the 8 markets I trade, and I'll go through every single high and every single low. Okay, every single high I'll place into one of 8 categories. Okay, so it doesn't matter the market, doesn't matter the time of day, the only thing that matters is that it falls into one of 8 categories. Okay, so what I'm in essence doing is I'm creating a template in which I can learn to observe and recognize these patterns. Let's take an example. Let's say, for instance, I have the last 10 sessions in the oil market. I want to go and extract every single high or low that was formed on high volume highs. In other words, the highest volume of the day or relatively high volume. Okay, and what I do is I go through all of the last 10 days, I look at the highs and lows, and I go and extract every single time there's a high volume at a high or low. Okay, and I go place it in bucket number A. Right, I do the same thing then. I go say every time there's a high delta, high and low, I go place it in bucket B. And every time there's a low volatility, high or low, I go place it in bucket C. Okay. Now what's going to happen is I'm going to have my 10 observations. They're going to fall in bucket A or B or C. Okay. Sometimes they could fall in bucket A and B. Okay. It could be a high volume high and a high delta high, in which case it forms in both bucket A and B. Sometimes it could fall in all 3. Well, no, it can't. So it cannot form in all 3. Actually, no, I apologize. It could form in all 3 as well. Okay, so you would have 3 X's. And you go through this process now with all 10 observations. All right. What you're going to start to begin to recognize is that all of the observations, all of the days where highs and lows are made on high volume, you're going to start to learn to observe what price does. Okay, and it's through observing what price does, your next step would be then to go and learn to ask a series of questions. In other words, first question, is there a great movement in price or is there a small movement in price? Okay, in other words, how does price close on the highest candle of the day? We then go on to the next question. What does the candle after, the high candle, what does that candle look like? What does it do? What is the volume like? So we begin to create a series of questions that we then pose to this bucket A. And we do the same thing for bucket B, and we do the same thing for bucket C. And what's going to end up happening is you're going to start to find that the answers to the questions you ask about bucket A and about bucket C, B, and about bucket C are all going to begin to spit out some similarities. It's those similarities that we ultimately want to develop, because if we can find, for example, every time there's a high volume high, we notice that the price change is relatively unchanged. In other words, we have a spike up, the volume picks up aggressively, but the price comes all the way back down and we manage to close unchanged. If we start to find that that is a common characteristic, we can then start to begin to develop certain strategies based on highs and lows made on high volume. Okay, so that's the basic premise of templating. Now, please don't get me wrong, it's a lot more complex than this. And it's not complex in a sense of the basic underlying structure. It's complex in a sense of the questions you learn to ask. Okay, this is probably the single most important thing about templating. You've got to learn to ask the right questions. Okay, if you learn to ask the right questions, you'll start to extract the right similarities, and those similarities are what the patterns are built upon. Okay, now, like I said to you guys, templating is dealt with extensively in the footprint course. It's done in that course for a very simple reason. Okay, the course will ultimately force you to use a template in every single strategy session. Right, so that you get used to the idea of templating. Now, make no mistake, this is a cumbersome process. It's time consuming. But what it does by answering questions, it forces you to think, it forces you to reflect, and ultimately it allows you to start to understand. Okay, you will understand how highs and how lows are formed. Okay, so hopefully that answers your question. We determine our highs and lows are formed simply by templating highs and lows over a period of time. Okay, let's look at an example now. I've got some brief examples for you, and I've kind of taken this from my buckets, my templates from the oil market for the last week. So I'm going to show you what they look like. Okay, very basic. So we've got a high volume high that was formed on the 15th of Jan. That's last Tuesday, and we can see it's a high volume high because it was the highest volume on the day. Okay, so the highest volume on the day happened to be the high of the day on Tuesday last week. Alright, so again, what does that mean? Does it mean price is going down? No. Okay, what it does mean is that we can go and extract every single time when there's the highest volume on the day and the highest form, we can go extract that. We can then go do a comparative analysis. So we compare the 15th of Jan with the 19th of February with the 20th of March. We compare them all. We go and start asking questions about what does the delta do? What is the cumulative volume? What is the time of day? Okay, what is the next candle do? Right? How many prices? What's the volatility doing? What's the momentum doing? So we create a series of questions that we start to ask about this bucket A. All right. Second example, high delta highs. Okay, again, highest delta on the day, and again we can see very big price change. Right, so what most traders do is they go and they make develop an understanding. There's a high delta and there's a big price movement, therefore there's momentum. They go long, and what happens? It goes the other way. Why? Okay, most people stop there and they go, well, I don't want to develop my understanding any further. The point and the objective of the templating and the bucketing is you're going to start to develop that understanding. You start to begin to recognize why these things occur. More importantly, you're going to start to see that they occur time and time and time again. That's the purpose of pattern recognition. The same thing with low volatility highs. Okay, to answer your question you asked about how do we see volatility on a footprint, well, it's very simple. Right? Every one of these is a rotation. When these rotations are the same size, more or less, we know the volatility is the same. Okay, as we can see, if I go back one, we can see the volatility as suddenly shifts in this example. Right? It's got a substantially larger rotation. So that's how we can see volatility on a footprint. Okay, so the last example was obviously a low volatility high. We can see a high made on very low volatility. Now again, as a basic example of the kind of question, if you take, for example, a low volatility high versus a high volatility high, one of the substantial differences is volume. Okay, and I'm going to show you that example. This is the oil market. Okay, we can see it's 9 o'clock in the morning. We've done 973 contracts on the day, and it also happens to be the highest volume of the day. Okay, so we've done pretty much the highest volume of the day in this rotation, low volatility. Let's compare that to what high volatility looks like. Okay, so yeah, we have high volatility. It's at sort of 7:30 at night, but we can see that we've done 5,200 contracts. All right, can you start to see the question you're posing there, which is, what does volume do in a high volatility high, and what does it do in a high volume high? Suddenly you're going to start to be able to recognize when we've got these types of highs and lows in place. Okay, but it doesn't end there. It's bucketing is the first stage of templating. Okay, it's the simple stage, creating categories, subcategories that you can then dump examples into. The real nitty gritty is learning to ask the right questions within buckets A, B, and C.